welcome everybody to another broadcast of Market Update with Max Drew, your friendly neighborhood CPA here. I like to take a look about once a week to update myself with some of the news and do a little reaction video. According to Morningstar, if you guys don't know who Morningstar is, that's one that a lot of financial advisors look to find their information about the U.S. markets. According to Morningstar, it says the U.S. markets are taking upper hand amid Iran war as international stock rally reverses. So apparently the international stocks were rallying high and the markets were increasing when the war first started. But what's happened is, well, let's look at the key takeaways. After outpacing stocks in 2025, international markets have tumbled since the start of the Iran war as investors seek refuge in U.S.-dominated assets. Why is that? Well, as a reason to buy U.S. stocks. But soaring oil prices could have harmful economic ramifications globally. Yeah, I've heard about that America's got a very large oil reserve and that we can function indefinitely on our own oil reserves. A prolific conflict in the Middle East could also wreak havoc in the American economy as the country's job market remains weak and inflationary pressures loom. Okay, so that's one of the things right now. So it looks like for some reason, investors now are starting to rally and move their investments towards America, as in 2025, the international markets were outpacing the American markets. That's according to Morningstar. All right. Al Jazeera. I've heard of them. I think they might be out of Qatar or someplace like that. What's going on with them? How badly has the Iran war hit the global market? Okay, let's take a look at this. Al Jazeera is saying, okay, the United States-Israeli war and Tehran's retaliatory strikes across the Gulf region have upended global financial and energy markets, raising concerns of a global economic crisis and even recession. All right, there you go. We've been in this incredible bull market now for about 17 years. You know, we have had a few recessions here and there. Here's the telltale signs that reveal the global economic fallout from the war. Let's see what they're saying. Energy prices. The Strait of Hormuz has about 20% of the global oil supplies that are getting cut off, mainly to China, Russia, Cuba, countries like that. It's really upending the communist world right now, or the former communist world. So that's a huge thing with energy prices. I don't know if you guys have been paying attention, but I heard Cuba's been like even shut down for a long period of time, like maybe 11 days or 12 days without power. Amazing. Okay, so crude oil prices have gone up to $106 per barrel, up 40% from February 27th. It's a huge rise in gas and oil supplies here. We're going to be seeing. We've all been waiting for interest rates to come down, especially home buyers, people who are selling real estate, things like that. But unfortunately, we haven't seen what we've expected here. We've actually got Federal Reserve is to keep interest rates unchanged in the 3.5 to 3.75%. I understand that mortgage rates and stuff are coming in around 7% for most people nowadays. So we're all waiting for the feds to refinance or to lower things. But it looks like we keep getting bad news that they aren't actually going to be lowering the interest rates. So the Fed maintained its median forecast for one rate cut in 2026. So we're going to see one rate cut. I don't know how much it's going to be, but I was hoping personally myself it'd be nice to get some good financing. Okay, stocks fell on Wednesday and Thursday after Fed Chair Powell underscored uncertainty surrounding the oil shock during his press conference. Said the U.S. had not made as much progress on inflation as it had hoped. All right, inflation remains above the central bank's 2% target rate as the market rate slows. I don't know about you, but for me, it seems like inflation might be a lot more than 2%. But let me know in your comments below. All right, and the last thing I wanted to bring you guys' attention to, something that people have been doing, trying to get ahead of what's happening in the markets, the day traders, the people who are watching opportunities in the market and looking for ways to take advantage of this volatility. Looks like Bloomberg is talking right now, and there's somebody here talking about Bloomberg. I don't know if it has the person's name here, but this lady's giving a talk about AI and how people are using AI to start with their investments. They're saying this is the first time that people are doing a minute-by-minute AI search purchase to try to get ahead. Let's hear what they had to say this March 20th, 2026.
At a time when the Iran war is upending global market, traders are turning to AI for not just finding information, but getting an edge in incredibly fast-moving markets. Now, this is the first time ever that AI is being used by traders this way. Some are turning to tools like ChatGPT, through to Claude and also Gemini to find information, get them quick and crunched in a way.
I don't know. It's amazing how much better these tools seem to be doing. They still seem to get a fair amount off, but I'd have to say it's probably like 10 times better than what it used to be.
That they can understand. Some are using ChatGPT and Claude to ask questions about oil reserves, the Strait of Hormuz, and the likely level of volatility to brace for. Think back to just a few weeks ago when markets were spooked by the thought of an AI disruption. Now they're turning to those very tools once again. Why? Speed. Especially at a time when headlines can send everything from crude prices to the dollar and treasury yields sharply moving in either direction. The biggest benefit of AI tools is their ability to quickly analyze complex data that would have otherwise taken hours of research to complete. One fund manager told me that mapping out possible conflict outcomes once took a full day. Now it takes about an hour. Another in a hedge fund used AI to quickly understand the types of ships that transit the Strait of Hormuz and fine-tune his estimate for how many barrels of oil would be needed to stabilize flows. But there are also downsides to such technology, like misleading outputs and flawed analysis if not cross-checked against reliable data. So, while the technology isn't a substitute for actual decision-making, some investors see AI giving them an edge in an uncertain market where they can either adapt.
All right, very interesting. If you're in the chat or if you want to comment below, make a comment on the video, I'd be interested to hear how many people watching this channel or watching this video have actually used AI to help them determine what they should be investing in the stock market, tried to make any predictive trades based on that. And if so, let us know how that's worked out for you. All right, now let's go on to what I call the yoga of investing. We're going to take a deep breath and we're going to try to figure out with the stock market, what have you done for me lately? Let's look overall. What's normal for the market? What's the market doing? Right now, the Dow Jones on this Friday was down about 1%, 0.96% on the 1 day. On the 5 day, it was down about 2.5%. Oh, not good. Now, if it did that every week for 56 weeks, you'd be down 112%. I don't think that could happen. That'd be negative, right? But let's take a look at the 1 month. 1 month is down 8%. Oh my goodness. So if you're watching your portfolio last month, you're probably thinking, when's it gonna stop? Make it stop. Okay. Well, let's take a look at the 6 month. 6 month, we are down about 1.73%. Most of it has been down recently in the 1 month, obviously because of the war in Iran. But let's take a look at the 1 year. Over the 1 year, actually the Dow Jones has done almost 9%. Very interesting. Okay, let's take a look at the S&P 500. 500 largest of America's stocks that are available for us to buy on the open market. Over the 1 day, it's down 1.5%. Over the last 5 days, down 2.5%. Over the last 1 month, minus 5.83%. Wow, that's almost 6% down. Some people might say you could look for buying opportunities. It might be time to buy good, strong stocks if they're on sale. Let's look at the 6 month. 6 months is down about 3%. Ooh, it's looking pretty rocky right there. Oh my gosh. And then the 1 year, actually looking a little bit better. We're looking at 15% up overall. So actually for the 1 year, being at 15% for the S&P 500 and for the Dow being at about 8.6%, that actually doesn't sound too bad to me for 1 year. Of course, those 6 months are looking rough. Okay, for the NASDAQ 100, we have got almost 2% down in 1 day. These are 100 of the largest companies, a little bit more tech flavored, and they're going to be all the 100 ones on the NASDAQ except for the financial companies. We're going to look at the 5 day, it's down 3%, the 1 month down 4.5%, and the 6 month down about 3.5%. Let's take a look at the 1 year. The 1 year, it's been up an incredible 21.45%. So for the Dow Jones, 8.64% for the 1 year, S&P 15% for the 1 year, NASDAQ 21.5%, 21.45% in the 1 year. How's that doing according to the 5-year average? 5-year average for the Dow Jones was 39.69%, almost 10% a year. Kind of, according to this, pretty close to normal, within about 1.5% of normal. If 10% was normal, 8.7% is pretty darn close. S&P 14.9, about 15% for the 1 year. 5-year average puts it at 66.27, about 13.5%. So actually the 1 year average has actually been better than the 5-year average for the S&P 500, if that makes sense. NASDAQ 100, when we come to it, we're going to take a look at the 1 year is 21.45, the 5-year 85.73. So 5 years been coming in about 17% a year. The 1 year beating it by about 4% at 21.45%. All right. Well, thanks for joining me today to take a look at the markets. Good news is the 1 year in relation to the 5 years is relatively good, but the 6 month in relation to any other things is kind of down. Hoping we're going to get through this war as soon as possible, and things will be looking up for us soon. We'll be back next time with more market news for you, and hoping that you're not panicking, and hoping that you'll have some good outcomes as the markets move forward. Let me know if you're using that chat GPT or anything like that to hedge your bets in the market. It'd be interesting to hear what kind of outcomes you're having. All right, take care for now, and thanks again for joining me for another episode of Weekly Market Update with Max. Take care. Bye-bye.
Follow, message us, or scan the QR code on the screen to learn more.